Students often inform me that doing some review questions similar to that which would be on a test is helpful, especially the true-false. Those are the ones that really force you to think and to see whether or not you understand the concepts here. So let's start off with some true-false for our first test that's coming up here. After each transaction, the basic accounting equation should remain in balance. That is true. A business transaction affects at least 2 accounts. That is true. It could be 3 or 4. Never 1. Always at least 2. Assets plus liabilities equals owner's equity is another way to express the basic accounting equation. No, it is not another way to do it. If we had assets minus liabilities equals owner's equity, we could call that true, but assets plus liabilities does not equal owner's equity, so that's a big F. The increases and decreases caused by business transactions are recorded in specific accounts. Yes, they are. That is true. Those accounts being things like cash. We talked about delivery equipment, accounts payable, accounts receivable. These are all accounts where we record those particular types of transactions. The free enterprise system is based on the right to own property. Well, that's true. That's something that we really haven't talked about much, but free enterprise is something that describes the type of economy we have in the United States, and the special words are free, meaning that you have a choice whether or not you want to own a business or which type of business you want to have, or you have the freedom to decide how to spend your money or not spend it. Enterprise refers to a business. That's another name for a business organization. And so within that type of system, you have the right to own property. And if you have the right to own property, then you also have the right to sell that property. So that's true. One of the purposes of accounting is to provide financial information about property and the rights to that property. Well, we spent some time talking about that. That's true. The owner's claims to the assets of the business are liabilities. No, the owner's claims to the assets of a business are the owner's equity or the capital, is where we have practiced making those type of transactional recordings. A creditor has a financial claim to the assets of a business. Yes, they do. If somebody loans you money for assets, they do have a claim to those. Got to pay your bills. True. An account is a record of only the increases in the balance of a specific item, such as cash or equipment. Well, no. It's almost true, but to make this true, it would be an account is a record of the increases and decreases in the balance of a specific item such as cash or equipment. So within accounts, we increase accounts and we decrease accounts. So this one is false. The total financial claims do not have to equal the total cost of the property. Well, let's call that VF. Very false. Yeah, that's definitely false. It must equal. Whatever assets there are or property, there must be a financial claim of equal value. So there's some true-false. Let's go ahead and take a look at a few multiple choice. In fact, this first one follows this one here on number 10. If the creditor's financial claim to property totals $1,000 and the owner's financial claim to the property is $11,000, the property value is... Now remember, this creditor's financial claim, another name for that is liability. And so the $1,000 plus the $11,000. If you chose C, yes, $12,000. The accounts receivable is an example of an asset. All of the following account titles are asset titles except, there it is, payable. That's liability. So B is the exception. 14 we will skip for now. We'll cover that in our next section. We're going to skip the next one. Oh, we can do 16. The purchase of a desk on account will increase office furniture and will also increase... So it was purchased on account, so that's going to increase the liability. And the name of that liability that we use, the name of that account is accounts payable. So we want that selection to be B. And the last one we will do here. The word equities refers to claims against the assets of a business by both creditors and owners. Creditors only, owners only, customers only. Well, the correct answer here is A, both creditors and owners, because liabilities is a type of equity, but it's a type of equity in which somebody outside of the business has a claim to the assets. So the best answer here is A.